There are only three guarantees in life: death, taxes, whales buying the tech dip. Call buying's at record highs. S&P 500 is also at record highs, and meta call sweepers are trying to send it to the moon. All that and much more in today's video. Make sure to subscribe below and give us a like if you enjoy this content. Regardless, let's hop into it. So first off, SPX call volume just hit a record $1.1 trillion. So a lot of speculation in the market, and that's been the case since 2020. Once call buying exploded, you saw a lot more retail investors, traders, a lot more money in the system. And the reason this matters is because options flow like this isn't tied necessarily to fundamentals in most cases. It's more so momentum, hedging, positioning, speculating, etc. And that normally means more volatility and quicker moves, which also means the market can just flip whenever it chooses to, kind of like what we saw back during the tariff fiasco, for example, that major correction, and then it went straight all the way back up to highs in a similar amount of time, all things considered. So this is a major culprit as to why we're back to all-time highs now on the S&P 500, because traders just continuously are pressing their bets with size. A lot of speculations. It's not even just retail, guys. We've seen institutions have to get back into the market because they were offside in positioning during the tariff fiasco as well. So crazy stuff happening in the market. Wanted to just start off the video by sharing that. As for the next thing, the S&P 500 is trading at about a 50% valuation premium to international stocks right now, which is very high. These are near expensive levels. This is not something that has to correct in the near term. I just wanted to update you guys because I found this interesting when I saw it. What is going to affect the near term, though, is the call flow that we saw on Friday, which is exactly what I'm going to share with you next. A lot of call activity on both QQQ and SPY to end last week. You can see some of the orders here. For example, a 2.2 million in premium for the 560 strike on QQQ. This expires within a couple of weeks as well, so great to see a print like that. Even early on in the session, you can see another gold order, at least that was highlighted in gold over here. This 620 strike SPY call for the August 15th expiration for 1.2 million in premium. So even the red over here, like if I scroll up and show you this, these are all put leaps. These expire in a year and a half from now. You can see December of 2026. So realistically, that's not going to have that much an effect, at least in the near term price action of the stock market. So wanted to share that really quick, as well as all of the dark pool prints that we saw on SPY from last week, specifically Friday, but you can see over here a $584 million singular dark pool print, the 614.92 level. This came after hours. You can see 412 Eastern. And if we go over to the dark pool levels feature here on Cheddarflow and look through all of last week, it's actually incredible how much premium, because first of all, it's summer month, which normally gets less premium characteristically. But then second of all, we haven't seen that much leading up to this, likely because it's the summer month. So it's actually incredible how much we saw. 1.4 billion over here, not that much. And then over here, 1.9 billion, but as you scroll down, you can see there was a lot of accumulation. 3.5 billion for a signature dark pool print, the 606.83 level, and then 1.7 billion just a cent under. This is over 5 billion in premium. And if you guys have been watching the channel long enough, you know I personally look for over 3 billion to definitely mark it on my chart and use it as a gauge for where price can go. This is over 5 billion. This is a lot, and it's very clearly accumulation in this case because of the resulting price action we had after. And as I scroll down, you can see a little bit smaller ones near 600. But what I want to do is go back to the SPY chart and kind of show you what we're looking at right now from a level perspective as for dark pool, as well as the call perspective that we've seen so far. All right, so we know that over $5 billion worth of dark pool premium was at that 606.83 level. So immediately after seeing something like that, you're going to want to mark that on your chart. So over here, we can just use normal horizontal ray and then go over to 606.83, or just about, because it was within that 1 cent price. We can see here and really optimize that. So about 82. And then we're going to mark this on our chart. You can see afterwards, there was an immediate gap up. And even if we don't use extended hours trading, for example, to show the regular hours, this is a breakaway gap that happened immediately after these prints came in back on Wednesday of last week. So what this means is this level, when retested in the future, must hold for continuation higher. As long as we are above, we can use this as a bullish bias. So as long as we're above this, this is considered bullish bias because there's so much premium at this level. Plus we had a breakaway gap after. If you don't know what a breakaway gap is, basically just an impulsive gap up and go continuation throughout the day. It's not like we gapped up to around here and then we fell back down, filled the gap, and maybe closed higher, closed lower after. It's not that at all. What it is this right here. We had a gap up and just continued to grind higher throughout the day and closed near highs on the S&P 500. That is a breakaway gap characteristic of continued impulsive momentum to the upside, which we're seeing right now. So the reason I'm sharing this level, despite us closing around 615 on Friday, is because this will at some point get retested in the future. And as a result, this is a beautiful buy the dip opportunity off of this level, or at least near here, because we know bulls must defend this in order for it to have continuation. And as long as it stays above, we can not only base our risk off of it, but also have a bullish bias, which is going to help with those trade ideas, whether it's SPY or Meta, like I'm going to share later in this video. So I wanted to just bring that to your attention right away. Also, something interesting, we saw a couple unusual SPY prints hit the tape over here on Monday, and those appreciated very nicely throughout the week during this impulsive behavior. So again, why I'm looking so much at that SPY and QQ flow, why I shared it earlier, is those guys did catch it very early on the move, were able to hold throughout that move, and they profited quite a bit, especially because they traded with size. It was about $3 million that they made in profit off of that trade. So now that we know that SPY has a very clear bullish bias above this level, especially because it's at new all-time highs, I'm going to show you Meta because that's an interesting setup for the week ahead. All right, so super interesting Meta flow from Friday specifically, as well as dark pool levels that we saw. A lot of premium going into Meta over here. And it's not like SPY, where SPY I'm looking for over 3 billion in total premium, or maybe like a 500 million singular order. For something like Meta, a couple 100 million is quite a bit. So 369 million over here is a lot. 164 million is a decent amount. 100 million, 104 million, 216 million. This is a lot of premium, guys, especially for a single day on a ticker like Meta. So already to begin with, there's a lot of interest on the dark pool side of things. Then we go over to the flow over here, and this is where it really caught my eye last week, is we had 1.4 million in premium over here for an out the money call, another 1.2 million in premium for the same strike over here, both of these August expirations. Also another one a little bit under $1 million for that same expiration and strike. And then over here, about $1 million yet again for the 735 strike, 1.6 million for the 735 strike. So across the board for these August 735 calls, we had well over 5 million in premium, which is a lot for Meta in terms of call flow, especially because it's out the money. That's what we like to see. It's consistent. These are continuous prints. If you guys have been watching the channel for a while, this is what I look for. I don't just look for a singular print. I'm looking for continuous prints in the tape, ideally highlighted in gold here on Cheddar Flow, because that shows they're super unusual. And as a result, that is something that piques my interest a lot. And I'm always going to check out the technicals afterward, which is exactly what I'm going to do right now. So this is a beautiful daily chart on Meta. You can see here during that correction we had during the tariff fears, it dropped quite a bit. And we can see specifically it dropped all the way down to around negative 35% at the low. So decent correction that it had, but it's already recovered all of it, almost back to all-time highs. And as a result, it seems like whales think it can go a lot higher. So based on the technicals that I'm seeing right now, a very basic downtrend can be drawn. First of all, it just broke out of this. So you can see from this top pivot, this all-time high pivot, down to over here where it consolidated for about 2 weeks. This was the level that had to break for that upside continuation. Now that we have that upside continuation, there's potential for a grind higher once all-time highs is reclaimed. So the next level I'm going to mark over here, of course, would be that all-time high level. If it can get above this, there's a clear skew to the upside, not only because it's a new all-time high and it's more likely to continue to grind higher, like I mentioned, but also there's significant backing in the flow. This is using two variables in conjunction with one another, and you also can base it on something like dark pools that complement this call flow that we saw from Friday. So a lot of interest from whales. They're buying hand over fist for these Meta calls, and we also got that downtrend break, plus we're almost at all-time highs. So for a setup that I'm looking at for this week, we have two options. First of all, if the market were to sell for whatever reason, this downtrend retest is the best by far for not only a support to buy off of, but also from a risk-reward perspective, because theoretically, if you see something like a drop to retest a downtrend breakout, let me just optimize this a little bit further, but if you see a drop to retest a downtrend breakout, if it holds, that makes the upside momentum much stronger than if it were to just continue to grind higher from that breakout. So you see something like a retest, and then you'll find a support and be able to take a day, 2 days, 3 days, etc. And then from there, bounce higher. This is a beautiful retest and bounce. If it did not retest and bounce and we fell through, you can use something like an hourly or even daily candle confirmation close under the downtrend as your stop. So you're looking at a stop range. If we just use something like this, looking at a stop range of a little bit kind of like it's shown on the red here. It's not going to be necessarily perfect because you'll have to see based on where the candle closes, but you're looking at something like this where you have profit taking along the way, profit taking at all-time high, maybe do 1/3 trim or 1/2 trim at 740. And you're looking at a lot of potential upside off of this. Either you want to just swing to all-time high or you want to leave runners beyond. That's personally what I would do in this case and potentially will do this week if I see this setup. And you're looking at like a 1-5, 1-6 trade. That's beautiful risk reward. So this is the first option that I found on Meta for this week. Now, if it doesn't sell off and continues with its momentum, which is likely to happen in my opinion, just because of this flow that we saw, the dark pool activity, etc., something like this would be a momentum play. And what I mean by that is look for something like a break above 741.35 at that all-time high level. And we'll get rid of some of this over here. But once all-time highs are breached, you can trade based on the all-time high. So you can see something like a gap up, maybe it gaps up over here and then you see a retest and then bounce, similar to how that would look off the downtrend. I've seen this many times on a variety of tickers, and you trade the long off of the retest over here, or you see something like an open flat come Monday or Tuesday, and then it just pushes through in the first hourly candle, and then you can add on the first hourly, and then your stop is back under. I know there's a lot of red now, and I'm drawing a lot on this. Hopefully it makes sense, but there's a couple options, bottom line, for a trade setup here. It's just all about closure above this level. Either you see a gap up and open around this level, or you see it push and have candle confirmation, again, either hourly, or if you want to wait a bit further for some more confirmation, look for a daily. Once it closes over, that's the entry. And then the corresponding stop would be that same entry that you took. So hourly candle above, hourly candle back under would be a stop on that. Otherwise, if you use the daily candle, then daily candle back under is the stop. And as long as it stays above, you'll see it continue to grind higher, similar to what I'm looking at on the S&P 500, as I mentioned earlier, because we have that known bullish bias over 606.82 because of those dark pool prints, because of the clear breakaway gap, impulsive behavior of this upside. And as long as it stays over, whether we retest it again or just continues to grind higher like this, we know it has a bullish bias over and we can trade based on that. So that's what I'm looking at for this week on both S&P 500 as well as Meta. I'm willing to trade both of them if my entry criteria are met. Otherwise, as always, appreciate you guys watching this video. I'll see you next time.